Well, now to the property market. Paul Ryan, senior economist at Proptrack, joins me. How are conditions in the property market coming out of the Easter break?
Good morning. The property market continues to go from strength to strength this year, surprisingly. We've got almost 2,000 auctions scheduled this weekend, which is very strong. Auction clearance rates are still sitting above 60%, and that's drawing more vendors into the market. So we've got listings up in March 10% on the level in February. So the property market, despite our forecast at the start of the year, has started really strongly.
And you say surprisingly because we've had, 10 interest rate rises. I know there was a pause Tuesday a couple of weeks ago.
Yeah, I think that's part of the answer here is that seller confidence is much higher now that the RBA has paused their rate hikes. Obviously, 10 interest rate increases have a big impact on property prices, and we saw that last year. But we've seen property prices increase over the past couple of months. And it's been the markets that have seen the biggest downturn, Sydney and Melbourne, that have led these increases. So there's been seemingly, based on the past couple of months of data, a big kind of turn in the markets and interest rate pausing, interest rate increases by the RBA ceasing has been a big part of that, I think.
Yeah, these property prices have started to increase, haven't they?
Yeah, so we've got prices up only a small amount, but prices increasing in Sydney and Melbourne, and Brisbane and Adelaide, the kind of boom cities across the country, is a big change from where we were 6 months ago, where there were kind of not steep declines, but kind of persistent declines being recorded in the biggest capitals. And
the demand for housing being felt acutely in the rental market. It's a real issue.
I think that's the big thing that's pushing prices up is that housing demand is incredibly strong. And we see that in the rental market. We've now got rental vacancy rates below 1.5% nationally. That's half the level we saw before the pandemic. So roughly speaking, there's half the number of available rentals. And that's pushing rents up really quickly. We've seen advertised rents up 11% over the past 12 months. Really, housing demand is booming. That's affecting the rental market the most. It's really, really tough for renters pretty much all across the country. Adelaide and Perth have rental vacancy rates below 1%. That's kind of emergency stations for renters there.
And some greedy vendors taking real advantage of it.
Conditions are such that demand is so strong. We've got so many people applying for rentals that vendors are recognizing this. And some vendors who are being, crimped by interest rate increases are feeling like they kind of have to respond to these market pressures. Fundamentally, rents are rising really quickly because demand is just far outstripping supply. And the solution here is building more homes. That's what governments need to and communities need to understand is that rents will keep rising and housing will keep getting unaffordable until we accept that we need to build more housing.
Yeah, I think in most cases it's a genuine rise, but I think in some instances, it's fair to call people out and just hope that everyone's respecting other people because lots of people are really being challenged at the moment financially. And those trying to rent properties are right in the spotlight there. Now, some talk interest rates will start dropping later this year.
We'll see. That's what the market is expecting. I would be surprised by that. There are some expectations that interest rates may go up next month. Obviously, the CPI will be the big thing that the RBA will be watching. We just had labour force data, which showed the unemployment rate was flat. That's consistent with the economy continuing to boom. So we know that these interest rate rises will put a huge dampener on the economy. The RBA will be keenly watching just how big a dampener that will be.
How do you generally assess what's happening in both Sydney and Melbourne?
I think conditions are a lot stronger than they were 6 months ago. As we talked about, prices have started to rise. We've still got a huge amount of demand. I think the thing that has surprised us the most about Sydney and Melbourne has been the amount of demand for property is much stronger than we thought earlier in the year. And that's the thing that's driving both the rental market and the purchase market. We've still got that big weight of 10 interest rate increases, interest rates up 3.5 percentage points. That makes it really difficult to get finance. So we're seeing more buyers in the market that have really large deposits, so lots of upgrade buyers. At some point, it's going to become really, really difficult for first home buyers who have smaller deposits and are looking to borrow that 80% LVR. That's, I think, where the market gets more and more strained, where we're relying more on those new buyers coming into the market. But at the moment, there's just that huge wave of demand that's continuing to keep prices up.
And you need to be a little bit clever sometimes, don't you? Particularly when you want to get into the property market, because if you can't buy where you want to live, quite often it's fortuitous to go and have a look at particularly now, have a look at the regional market because it's strong. Maybe buy something there and rent where you're living or rent where you're working, because that way you're in and you can tick both boxes until there's a time where you can possibly get in where you want to live.
I think people are more and more looking at those kind of solutions. I think the prospect of saving a deposit in Melbourne or Sydney, in Sydney, for instance, a house median price is $1.1 million. So I think a lot of the reason why we've seen the smaller capitals, places like Brisbane, places like Adelaide in particular, which has been booming, is because people are looking at these alternative locations, places where they do have a deposit to afford somewhere, particularly detached houses. And yeah, we're seeing also with remote work, not just people buying as investments to get into the housing market, people considering moving to Brisbane, moving to Adelaide, and taking advantage of just cheaper housing costs. We've seen huge migration from New South Wales and Victoria to Brisbane and Southeast Queensland in particular. That was one of the huge trends that we saw throughout the pandemic. And I think that's continuing, not at the same speed we saw throughout the pandemic, but we still expect those regions to outperform. And part of that is lifestyle. The climate is good and, these are pleasant places to be. But part of it is pure affordability.
Yeah, the cracking cities too. Brisbane, I was there this week. Adelaide, we're watching it with the gather round. There's plenty of reasons to live in those spots. But good to talk to you. Enjoy your weekend, my friend.
Thank you very much.